Happy Saturday, everybody. Guys, listings are going vertical. I mean, they could not grow any faster right now than I could imagine. I mean, that's how fast they're growing. We're gonna go under the hood here because it's not just like this flips to a buyer's market. There's some dynamic changes that have to happen. So in this video, I'm going to explain to you what is happening and why in 3 weeks this market could completely flip. And it's pretty wild because, guys, listen, it is not a buyer's market everywhere. It's not a seller's market everywhere. There are some places that are scorching hot. Like, let me show you this place right here. This is south of Franklin. Price band is 700 to 800,000, and you can just see almost everything in that 700 price point under contract. It is scorching hot here. Versus when you come up to Nashville and you look at, like, let's say million plus, you get way more $1 million listings than you have under contract. In fact, you know, some people say, oh, that's just a normal market that you'd have 151.5 million plus listings versus the like 38 under contract. And maybe they're right. Maybe, you know, that's only a 6-month supply. Maybe that's just a quote unquote balanced market. But I'll tell you that in this market, we ended up offering somebody a significantly less number that we thought, we thought it was the lower side of fair, but we ended up offering a much lower number on a listing and they accepted. Guys, that's what a buyer's market's like. You know, we're always going to look at the market and we're going to try to get the best value that we can get in the market. Well, how do you get the best value? You look at things like, what's the rent compared to the sales price? Or looking at comps, especially when you get the $1 million, once you unanchor from rents, I mean, it really is just a balance sheet item, right? It's like just literally, Jeff Bezos spends $200 million on a mansion. It's like just arbitrary for him. He's just putting it on his balance sheet, and so you look at comps and you look at what the value you're getting relative to what other people are paying. You can still buy things for better value if you're careful and you're strategic. Tesla just laid off 14,000 people, okay? And it was a complete mess. Now, this was shocking, not because, people started hearing rumors before it happened, but we're starting to see some more high-profile layoffs, all right? We've seen Tesla, Google just had one. Maybe it's just because I'm in finance, but Google just laid off a bunch of people in finance. And so it's starting to me, what I'm starting to hear a narrative of is more high-profile layoffs. And fear is starting to creep back into the market. You're seeing 7.5% mortgage rates, which I've been saying they could go up forever, and they're continuing to creep up. Vanguard warrants 10-year could jump back up to 5%. Just translation, mortgage rates could be headed up towards 8% again. This is a shock to nobody. You guys know mortgage rates are 7.5%. Don't plan on them coming down. But if Vanguard is saying they could go up to 5%, this is a clear sign that they could actually drop. Now I'm like, oh, maybe mortgage rates will drop. That's only a partial joke. Okay, I want to show you something crazy. Okay, so look at this. Active listings just exploding. We're at 5841 versus 5318. That's well over, that's 10% growth. That's 10% year over year increase in active listings. But look at what happened in the past 2 days. Just absolutely vertical. Look at where we were last week, 5675. Almost 200 listings up versus the week before we were at 55, 56. We were only like 115 up. Look at this, just rapid growth. I mean, they're going vertical, guys, vertical. And listen, here's the peak, 64.58. That's the peak of November in 2023. Guys, we are rapidly increasing. We could be there in just a few short weeks. I mean, we're growing at almost, what is that? 58.41 and 56.75, 170. If we just grow at 170, like linearly for the rest of 4 or 5 weeks, we'll be there. We're literally talking about in the middle of May, we could be breaching where we were in November, but it gets even crazier, guys. If we zoom in, we can see Williamson County going vertical 946 versus 857 where they were. They're majorly changing. It's a major shift. And Williamson County is hot, guys. I'm telling you, I've got, you saw at the beginning that there's just so much demand there. Look at Davidson County. Davidson County is just absolute. I don't even know how, this is just mind blowing, going from 1949 to 2051 in 1 week, growing 100 listings. I mean, what is that? That's like 4 or 5% growth in a week. coming from 1949 to 2051, you can see, I think that might be the biggest jump, the biggest 2-day jump I have seen. I mean, I'm looking on this chart. Maybe in June we had some big jumps, but there's a key difference between June and today. And I'm going to show you what that difference is. And the reason why is we're going to look at a price band here. Okay, guys. Now listen, I'm telling you, this is the most important chart that I can show. Okay. Because what I'm showing you are people that were not participating in the housing market last year are participating this year. Okay. And this group right here, this under 700,000 group, the vast majority of buyers fit within this group. This is almost 1.5 times the median sales price of a house. Okay. And what we're seeing is week over week growth, 10, and then we've got 11, and now we got 21. We're starting to see it increase. But why did I say 3 weeks? Why is it in 3 weeks that this could completely flip the housing market? Well, it's because in 3 weeks, let's look at contract volume. Okay, in May of 2022, contract volume peaked at 615 for this under 700 group, which, by the way, guys, these are existing homes. These are homeowners that are selling. This isn't new builds that have an agenda to keep their price up. They're using their margin to buy down rate, to keep a fake price on the market. I don't blame this. No hate on new builds. I mean, I would do it if I was a builder. I would try to keep that price up and I would buy down rates, but it is a fake price to keep that market up. Existing homeowners don't have that agenda, guys. Okay. Contract volume in 2022, 615, dropped massively. This is for Davidson Williamson. Dropped massively, peaked at 500 in the May of 2023 at May 10th. And here we are, we're at 445. We may get up to what, 460 probably. So demand's still down year over year over year. But who's coming back on the market? But people are now starting to list their houses, guys. They're starting to list their houses, but demand, so think about this. Active listings are up, but demand is down. What does that mean? That's cashing out, guys. So we have a group of homeowners that are cashing out of their houses. Okay, they're selling, but it doesn't appear that they're buying again. Okay, it doesn't appeal because they're accumulating, right? Active listings accumulate because more listings come on the market than go off the market from contract volume. Okay, so this is cashing out. So we have a group under 700. They're cashing out of the market. They were not cashing out last year. They were hanging on. They were white knuckling and they were hanging on. And so active listings continued to drop last year as demand absorbed them. This year, they're selling at a greater pace than contract volume. But guys, again, if this continues, what happens in May? In May, demand starts falling. If demand starts falling, but we still get those new listings coming on, what are we going to have? We're going to have a listing explosion of existing homeowners under 700,000. Now, if you go back, if we zoom out and we look at 22, this is what happened in 22. Okay, you go to May, this was peak contract right here. And then from May 28th all the way through the end of July, listings just shot up. They tripled almost. They tripled through October, right? But they more than doubled in just 8 weeks. Okay, they went vertical. Could we see the same thing in 2024? Could we see listings just go vertical when contract volume peaks? I think it's possible, guys. I think it's possible. I think there's a lot of bearish narratives out there that may be scaring people. And quite frankly, there's a lot of people that can't afford their houses. Now, why prices can drop because of this group is a couple reasons. One is there's a lot of equity here. There's a lot of equity. There's a lot of people that have a lot of money stored in their house that they can get out of. If they feel fear that the prices are going to drop, they'll exit the market and drop their price just to get out of the market quick. Okay. Look at active listings in 2022. Do you realize, guys, actually, you know what? Let's do a ratio here. I'm going to take active listings over contract volume so we can compare what was the contract volume during this time. The reason that's important is because that will give you like what supply feels like. Here's what I want you to see. Prices started dropping when there was a 2-week supply on the market in April of 2022. There was a 2-week supply and prices started dropping. So the idea that you have to have supply to get price drops is false. Supply absolutely helps. You do not have to have supply for home values to drop. Home values started dropping in April of 22 when there was a 2-week supply. Okay, fast forward today. There is 4 times the amount of supply in 2024 than there was in 2022. But what makes this different, guys, is we're now starting to see that build like we did in 2022. I do believe that this group is cashing out. It is the most rate sensitive group. You can see that by demand, right? We can look at demand and see that it's been down every year. But there's another group cashing out, and boy, oh boy, is it exploding. And that's the 700,000 to $1 million, guys. Look at this, 700,000 to $1 million just going vertical last week at 290, and now we're up to 321. So this is a 10% growth in inventory in this price band in literally 1 week. Guys, that's nuts. That is nuts. So you can see the 700 to $1 million, there's huge growth here. Okay, demand is still, it's actually lower for 700 to $1 million. But you look at pictures like this, and it doesn't mean there's not demand in locations, right? This is a severe seller's market right here. Severe seller's market. I mean, we helped someone buy in this neighborhood in the 600s 2 months ago, and it's probably appreciated 5 to 10% in literally 4 weeks, which is just crazy. Okay. Just crazy. But we are seeing signs that it could slow down significantly, right? If this accumulation is consistent and continues to go, and then we see contract volume peak and start to drop while those new listings continue to come on, while people continue to cash out the market, guys, these are the groups that will drop their prices to get out of the market. I'm not going to tell you, it's historically unaffordable. Okay. But there's so many currency games going on. I'm not going to sit here and guarantee you the prices are going to drop. But I will tell you, this is as bearish as I've seen it, specifically on Davidson County. It is looking bad in Davidson County. I mean, maybe it's 1 week. Maybe it's just one of these bump ups and then it kind of calms down like it did last year right here, April 13th through the 18th. It bumped up quite a bit. Maybe it's just one of those bump ups. Because if this is a trend, it's going to be wild out there, just absolutely wild. So we'll see if that has an impact on the market. At the end of the day, there's a lot of demand for Nashville, guys. At the end of the day, there's so many people moving here from other places, and it has been remarkable at how strong Nashville's market's been. But these are storm clouds. I mean, this kind of change in active listings, it's not seasonal. It's abnormal. It is an exaggerated seasonal move. Certainly welcome, though. Appreciate you guys watching. Have a good weekend.